You know, people say our educational system is busted. I don't believe it. That was super smart. I love the insight. I love the way the data was coming together. I love the answers that he gave. Super clear and to the point. How about you guys? Yeah, outstanding. Eric, well done. Well done. All right, let's bring two gentlemen to the stage from Basin, the Insider's Guide to Building Generational Wealth in Energy. Adam Butcher, Tim Davis, welcome to the stage, fellas. Have at it. Thank you very much. Appreciate it. Go get them.
Are we on here? There we go. Y'all can hear me.
Can you hear me okay? It's a couple minutes after noon, so I'll be the first to say good afternoon to you. We're glad to be here. My name's Tim Davis, my good friend, business partner, Adam Butcher, and we welcome you to Texas. Our office is 5 minutes from where we are right now, and I don't want to rub it in, but I slept in my own bed last night and had breakfast with my 4-year-old son this morning, who sends you his best. But we left him at home, so don't worry about that at all. We're going to throw a lot of information at you about how we see the oil and gas, the energy markets. And so to do that, we have a QR code that we'll put on the screen. If you will get your phone out, we're going to go really fast through a lot of this material. This is our space. This is our industry. And we, as you imagine, it's pretty dynamic. And so we want to go quickly. You can take this presentation with you when you leave. We have our booth in the back. We're excited to talk about all manner of energy and oil and gas with you this weekend. So as we get started, Adam, why don't you tell them a little bit about why we might be worth listening to?
Sure. First, does everybody have the QR code? We good to go? Good to go. Well, I'm Adam Butcher. I serve as Basin Ventures president. For the past 20 years, I have been in the oil patch primarily as a
landman.
Just like the TV show, right?
Show.
Absolutely. Except you're not going to catch me out on a rig turning a wrench, and I will not put out anything on fire, so don't ask. In a prior life, I owned and operated one of the largest national land brokerages in the country. We had 1,000 landmen in 18 different states, building projects for every company you probably ever heard of and dozens you haven't. You'll see up there that we've managed over $1 billion in capital projects. So we believe that we have a great team, a great experience base, and it meshes well with Tim's experience as well.
Yeah, if Adam is the landman, I am the lawyer. I'm still a practicing lawyer. I'm a partner at Texas's largest law firm. My office is in Fort Worth. A lot of my practice has been involved in these deals, litigating these deals. I've litigated cases in the oil patch. It's hard to be a lawyer in Texas and not be involved in that. But part of my practice as well involves the representation of candidates and office holders and politicians. And so thank you for not throwing anything at me for being a lawyer.
He got the landman joke, and he's a political lawyer, and y'all didn't say anything? Come on.
At least I didn't get booed. That's an improvement. Right. And so we think our expertise really pairs well together for what we're doing at Basin and understanding these markets, understanding how politics affects these markets, and how the economy is going to affect these markets. And that's what we want to talk about today.
So we're not going to focus a whole lot on who we are and what we do beyond this. We know you want to talk about the markets and what we can expect moving forward in the markets. But at a high level, think of us as energy finance. We're not drilling our own wells. What we're doing is investing in best-in-class operators at their direct project level. We're not buying their stocks. We're actually minority partners in their drilling projects. Conoco drills a well. We want to be in that well because Conoco knows what they're doing. So again, think of us as a baby in-cap, a small private equity shop. Tim, you want to tell them a little bit about the meat and potatoes of what we do?
Yeah, the meat and potatoes of what we do are these non-operated working interests. As Adam said, this is energy finance. We are financing the operation in exchange for a share of the production. Anybody who's involved in this space will tell you all about the tax benefits. You see that in the red box there on the right. We won't spend any more time on this. That's time for a different presentation. We want to talk about the markets, but we're excited to talk about this stuff with you, with anybody who has any questions.
So real quick, why this opportunity exists is because energy has been financed in mainly 3 different ways. In the 70s, 80s, and before, in my father's day, you would go to banks when banks actually helped their customers do things. I apologize to all the bankers in the room, but hey, it's true. Banks exited the space in large part and gave way to giant private equity, your BlackRocks, your Apollos, your EnCaps, people like that. About 5 years ago, those same folks started to trim down their investments in the space and left room for smaller, more niche finance shops like us to be able to get into some of these projects at a much smaller level. The industry's been asked to live within their means, return to their shareholders, and that's given some budget shortfalls that we'll talk about more in a little bit. These are some of the areas that we look at, some of the areas that we invest in. If you've been alive for the past 20 years, you've heard about the Permian Basin. What you may not know is we're standing right now on one of the largest natural gas formations in the world in the Barnett Shale. I've taken about 10,000 leases across the Barnett Shale, so I know this area well. But we invest in all kinds of projects across all of these different areas, and we're looking for a diversity of not only operator but commodity type. We're going to talk a lot about oil and the price of oil and how fun that may or may not be right now. But we're going to talk equally about natural gas and the price of natural gas. And that's pretty fun right now if you haven't been paying attention.
All right, so we've gone quick. We're about to go a lot faster as we talk about the trends that we're seeing politically and in the market at large. Obviously, oil and gas is a dynamic market. It's a commodity. It goes up, it goes down. It's dependent on a number of factors, a lot of which have to do with the current administration. And so we were in our office just a few miles from here a few days ago watching the president make the announcement in the Rose Garden about the incoming tariffs on Liberation Day. And we were asking each other as we sat there and talked, how is this going to affect the oil and gas industry? How is it going to affect what we do? We're all self-interested investors at the end of the day. Our read of it right now is it doesn't seem like these tariffs relating to other countries are going to have a deep impact. They'll have some, but to have a deep impact on the energy market. Most of the rigs that we need are here. Most of the operations that we need are domestic. And so at least for now, in the short term, that supply will be unaffected by anything that's coming from overseas. Now, that said, one thing is happening overseas that we think is going to have a positive effect on this market, and that are the sanctions that are being placed on Iran and Venezuela. And you may have seen the president on Air Force One this last Sunday say that he's very upset with Russia right now. And
No kidding.
He did. He's very upset.
All
He's
right.
very upset. And the first thing that he mentioned was Russia's energy supply as a possible target for the next sanctions. Taking international production offline obviously will only have a positive effect on domestic production, on domestic prices, on domestic supply. And so while we're watching tariffs, we're also watching sanctions as well. But we also think that there's going to be some policies out of Washington in the administration. There are energy, Secretary Wright, the Secretary of Energy, has an oil and gas background that are going to be positive for domestic production as well. And so we think that over time, as these policies, as these tariffs, as these sanctions work their way through the market, that will actually have a stabilizing effect on prices here domestically. That said, despite the fact that we think there will be stability, we still think the best way to view these deals is as conservatively as possible. The best way to price these deals is as conservatively as possible.
So being in the patch for a very long time, and my father 20 years before me, we have a general understanding what break-even prices are. And unless you have 30, 40, 50, 100,000 acres in the Permian Basin, your break-even price typically is going to be between that $65 and $75 a barrel. So what happens if we tank down to 40? What happens if we tank down to 30? You're likely going to have a yo-yo right back up to 90. So where do you end up averaging over the course of a prolonged fund like ours? Somewhere in the $70 range. We think that's a good metric to use when pricing and evaluating projects. We're using $3 an MCF right now in our models, in our funds for natural gas. It was over 4 when we started the day. Nobody tell me what it is right now because I don't want to know. We'll see what it is tomorrow and the day after and so on. But again, we're modeling these things over the course of the lifetime of these projects, so we think 70 and 3 is a safe bet. We've seen strip pricing on natural gas up in the 5s and 6s.
Yeah, so we think this policy will balance out. We think the industry will stabilize just like all markets do in response to external pressures. Now that said, there is still a strategic response that we think is important for a smart investor like you who's looking at this space. The first thing is to ignore the tariff noise, and I think it's even been said already this morning. The president is very smart at what he does with this. I am a fan of the president. I voted for him. I'm a member of the Electoral College. I voted for him
There
in
it
the
is.
Electoral College.
There it is.
Yeah. In fact, I'll brag on Texas for a second. You all probably know the Electoral College meets at the same time, same day, all across the country, all 50 states. And as the Electoral College was meeting that day, and obviously the East Coast starts first because they wake up earlier than us in Texas. And as the college moved west across our country, Texas was actually, it was our 40 electoral votes that put the president over 270. And so I like to take credit for being the one person in America that elected the president.
He does take credit for that, too.
That being said, ignore what he's saying about tariffs, because I think what's happening is he's using it as a negotiating tactic. You all know that. You all see that. And so in energy, like all sectors where we face uncertainty, we have to look at fundamentals, which we'll talk about a bit in our presentation. And so for now, let the president do what he's doing. I think we saw some great information in the presentation right before this one about how this may actually work to our benefit long term. And we think that's going to happen, and that a lot of this is negotiating tactic.
But a basic fundamental of what you probably all learned a very long time ago, what do we do when prices are low?
We buy.
You're the only one that knew that?
I think so.
All right. Well, if we have a prolonged period of price depression, let's go buy it all, right? Because when they're in the game at X and we can get in the game at Y, who makes the money? We do. All right, I guess I'm the one that knew that.
That's just you.
So again, we talk about price discipline. We talk about staying disciplined within what we know are the break-even points. We have experience across the country, and we're looking at what does it cost to build a road in North Dakota? What does it cost to build a road in Louisiana? These all go into the metrics of what we're evaluating. And so we stay disciplined with the way we model things. We don't get too excited thinking, oh my gosh, natural gas is going to be $12 an MCF. Just you wait. So we're going to go buy everything right now thinking that we're going to buy it $10 an MCF. We're just not going to do that.
Yeah, the other thing that we would say is deciphering political noise. So even apart from tariffs, that phrase drill, baby, drill, it's a great phrase. It polls at 80%.
Great
across
phrase.
all administrations, across all demographics. It is a high polling phrase. That would lead somebody to think, well, we're going to be oversupplied in the market if we're just drilling, drilling, drilling. We'll talk about why we don't think that's the case on the next slide. But a smart investor has to decipher, again, what is the rhetoric, what is the tariff, what is the discussion, what is the talking point from what's actually happening in the market.
So again, as we talk about how we invest in the marketplace, meaning Tim and I and our investors, we're looking at opportunities across oil and natural gas. We don't want to just sit here and talk about oil like it's the only thing that comes out of the ground. There was a period of time where rigs all over the country were only seeking natural gas plays. And we may not be too far off from that. So as we see opportunities arise in different plays, we'll model our funds, be it our fund last year might have been 85% oil, 15% gas. Maybe our fund right now ends up 50-50. At these current prices, that might be what it ends up. Sure. So we've talked a little bit about the geopolitical world, lay of the land. Let's talk about what our industry is doing. What are our peers talking about? What's going on in the back rooms? The things that you're not going to see on the news channels, the real conversations taking place. Well, a lot of people are annoyed. Drill, baby, drill is nonsense. Are we going to drill ourselves out of a job? That doesn't make any sense. We're going to drill responsibly. So over the course of the past 20 years, you got to know where you've been to know where you're going, Tim. So over the course of the past 20 years, we have what we call the shale revolution. The shale bros came into a new era of shale development. They were drilling everything they could possibly drill, buying everything they could possibly buy, and all of it was funded by BlackRock. All of it was funded by Apollo. All of it was funded by EnCap. They didn't think how is that going to be profitable in the long term. So over the course of time, our shale bros grew up. And now what we're talking about is being efficient in mature fields. We have a saying around the office that if anybody tells you that they found something that nobody else has ever found, put your wallet away. Put your wallet away, real quick. There is no mystery out here. What we may find are new efficiencies in mature fields. We will find step-outs where a field may have been developed vertically for 50 years, and now they're seeing if it's a horizontal play. We have that. But mostly what we're doing is we're trying to be efficient and create efficiencies wherever we can.
Yeah, as an example of deciphering the noise and filtering out some of the politics, that third bullet point there under number 1, I love talking about that statistic because last year, this is the government telling us this, not an industry player. Last year in this country, we produced more energy than any country in the history of the world when we produced 13.2 million barrels a day. It's an incredible number. But it's only incredible when you think that this year we're expected to exceed that and beat that number and set the record this year at 13.5 million barrels of oil a day. That might make you think, oh, we're going to get oversupplied. The problem is that supply is rising to meet increasing demand from energy-hungry industries like AI, which we've heard so much about today, cryptocurrency, healthcare, construction. There is almost an unmet need within the industry for continued oil and gas production. And so filtering out the noise, that's the fundamental to pay attention to.
There was a question earlier I heard, where is that energy going to come from? Well, I think that we have heard a lot about natural gas. That's why we're very bullish on natural gas and natural gas projects here in Texas, in Louisiana, and across the country. Another trend that we've seen over the course of the past few years is the industry is being asked to do more with less. Again, big private equity has tightened the purse strings. They don't have unlimited budgets to do everything that they need to do. So as they've acquired leases all over the country, they know that they have to develop their leasehold, their operated leasehold. They may have a lot of non-op interest all over the country that now they got to figure out how to pay their bills. So if they have a $100 million drilling budget to drill what they have to drill, and they're hit with $100 million of obligations on their non-op leasehold, well, who's going to pay for that? They're going to have to figure it out in their cash flows, or they're going to pick up the phone and call Adam and Tim. Yeah. Number 3, M&A activity. Huge consolidation going on in the industry. In another capacity, I sort of serve as a consultant or expert, if you want to use that phrase, on a lot of mergers and acquisitions throughout the space. Huge acquisitions that you guys have seen probably in the news, as well as the regular run-of-the-mill $100 or $100 million acquisition that you might not think is a big deal. And so we've been privy to a lot of information about how all of that operates, and that's something we're thinking is going to continue. Last and not least, what are prices going to do? Anybody know? Anybody got a guess? We'll see, right? Who's going to bomb who tomorrow? I don't know. Who's going to get a tariff tomorrow? I don't know. So we'll see what prices do. We're bullish on natural gas. We expect natural gas to be the play, but we're going to take opportunities where we can find them.
We have our booth in the back. We have a breakout today, and we would love to talk with you further. Thank you for your time.
Do we have time for questions, or is that it?
That's it.
All right.